The median sales price for a single family home in Maricopa County, which encompasses the Phoenix metro area, is $543,000. This is about $3,000 higher than it has ever been, and our last peak was in May of 2022. Now, just a little perspective, because if you're looking to buy in Scottsdale or Cave Creek or anywhere in the Northeast Valley, really, the median sales price is going to be closer to $1 million. So how did we get here? I have personally made over 50 videos about the market here in Phoenix since I started my channel about 4 years ago. And what I'm usually talking about is how the market is going up, because that's what we've been seeing. But for once, I feel like there might be a change, maybe even a couple cracks. Now, I don't believe that our market is going to crash. I analyze this a lot and I'm right a lot, but I am starting to see just a few cracks. Let me tell you what I'm talking about. I'm Shawn Shackelton, your resource for all things real estate here in Scottsdale and Phoenix. Now, this headline reads that the median sales price in Phoenix is expected to continue to rise. As you read on in the article, they say this: so far this year, home prices are on the rise. In March, the median sales price in the Phoenix metro was $445,000, according to the MLS, up $15,000 from January. Numbers are expected to get close to $450,000 when the April numbers are officially released. Now, this article came out one day before me recording this video, and we have much more current data than this. So although I'm not saying that this is wrong, I'm saying it's outdated. And this is how I feel whenever they quote the Case-Shiller Index. See, the Case-Shiller Index has a 2-month lag in their data. So often when a reporter is citing the Case-Shiller Index, they're telling us what has already happened. So if you would like to see where we've been, then take a look at the Case-Shiller Index. All this to say is that we have seen prices rising for quite a while now, with that big spike that started in May of 2020. And even with the interest rates rising over the past year, this has not stopped prices from continuing to go up. So where are the cracks that I'm seeing? First, we have to take a look at our inventory, which has been increasing since 2022. Now, it is not going up really fast right now, but it is increasing. Let me show you what I mean. So I wanted to bring you into the Cromford Market Report, which is I talk about a lot on my channel to show you what our inventory is actually doing. And it's always great to see kind of historically where it's been and what it's doing now. So if we go all the way back to this brown line, which is 2020, we can see what has happened. We started a little more than 11,000 listings. We kind of came down. This was all COVID. So it kind of shows you where we went. This is when our inventory way down. Then we go to the blue line, which is 2021. This is that whole year we stayed so low. It was really crazy. And then the red line, we go to 2022. This is when, again, we started really low and then it really started to ramp up. And just to remind everybody, this is when the Fed started to raise the Fed funds rate. So this is when our inventory really started to shoot up, and then it kind of leveled out and started to come back down. Then in the pink line is 2023. This was all of last year. Again, we started much higher than we had been in a long time. But then again, it started to come down. We still were not following our normal seasonal trends with inventory. So we started to come down, and then we ended again lower than we had the previous year. And then this year so far, we have just started to trend up, although not drastically. We were nowhere near 2022. However, we're higher than where 2022 obviously started, but not as high as 2022 got. So our inventory is going up. However, it's not going crazy out of control to really skew everything. This is one of the things that's helping everything stay in balance. Now, I know when we take a look at that chart that I just showed you and went over with you, it looks like we have a lot of listings. But let's take a look at another chart that's going to show you historically over many years what our inventory has looked like going up and down. And this is going to take you back even farther than right before the pandemic, which was absolutely crazy. So it's going to show you longer periods of history for what our listings have looked like. Okay, so this chart's going to show you, it's titled the month supply, but it shows you kind of the ebbs and flows of how our inventory kind of comes into the market and goes out of the market. And this goes back all the way to February of 2011. So you can see kind of how we peak and valley throughout the entire year. And again, some of this is just our seasonality of when we see our inventory come onto the market, which is going to be kind of early January. You'll see it as we kind of go. So you see kind of inventory come up, and then it'll start to fall. Again, this is very normal and seasonal. Then we get to this, which is, again, that COVID craziness. This was not normal, 0.4 months of inventory as a whole. And then here we are today. So you can kind of see there's a little bit of an increase right there, but it's nothing drastic. We don't see anything. This right here was pretty drastic. And what this was was again back to when the Fed had started raising the interest rates and we saw our inventory really increase. That's what this is right here. But then again, we started to see our normal seasonal trends. We came back down. This was in the summer, as we start to trend down in the summer, and then it starts to climb again and get ready for our season. But hopefully this just shows you kind of historically what our normal ebbs and flows are in our market. And it just shows you as well, we're at 2.4 months of overall inventory in the market, which is not as high as we've been. I mean, even last year we were higher at 3.8 months. Now, overall, this increase in inventory has been fantastic for buyers. This is giving them a lot more options, and I'd love to see it. But from here, we have to look at our overall demand in our market. And as you can see, our demand has decreased while our supply is increasing. And this is what has put the Cromford Index back into balance. To further demonstrate just the supply and demand that we have going on in our market, let me show you this chart. Okay, so let's take a look at this contract ratio. This shows you how supply and demand kind of work together. But what this chart does not do, it does not adjust seasonally. So it does not have any adjustments for the seasonality in our market. So this is in real time. All these colors are different months. So you can see we normally see this rise in January, February, March, April. Then we start to come back down in the summer. And then it does the whole thing over again. So this is all the way back to 2015. Very normal to see this seasonal trend as we kind of roll along. And then again, this is COVID. This was not normal. Right here, this was not normal. This was COVID when it happened. And then we shot up, and then we shot up even farther. And then again, we started to see this decrease because, again, a little bit seasonal. And then bam, we saw this again. And then this right here, again, is just another demonstration in another chart of what was happening when the Fed started to raise the Fed funds rate, is that we saw the Cromford Market Index and the contract ratio really, really drop. And then we kind of came back down. Again, this was normal. And then we get down pretty low. But again, this is normal in our seasonal trends. It's normal for us to see this come really down low December, January, and then start to come back up. This was last year, 2023, pretty good year as far as the sales. But this is what you start to see, right? Your active counts, if you see, this is 11,000, almost 12,000, and we only had 9,000 under contract. The inventory started to come down, as well as the number of homes that went under contract. And this is what shifts that contract ratio. Then we're at this year. So we started to see that normal trend, and then interest rates really got involved, and interest rates started to go back up again. And this is where we've just seen a flattening right here. This is just showing you that push-pull between supply and demand. Now, you can look at all of this and it gives you great insights. But to get that additional layer of information, this is something that you will only get from someone that is in the market every single day, which I am. And here's what I can tell you. And honestly, this is a conversation that I'm having with buyers and sellers every single day. Our market, for lack of a better term, is confused. And here's what I mean by that. When you look at homes on the market, there are some amazingly updated homes in great neighborhoods with views and have every finish that buyers are looking for. These homes are still selling in a day with multiple offers and selling for over the list price. Then there are homes that need a little bit of work. Maybe they're in that same great neighborhood, but the home needs a little work. Those homes are sitting on the market for longer than the seller would really like. And because their neighbor's house sold so fast, these sellers are feeling, confused. These sellers are having to do 1, sometimes 2 price reductions just to get their home sold. Now, when I see this, I know that I can not only negotiate for my buyer for price and terms, but if they also need a rate buy down, I can often get that as well. These are the homes that are putting some of that buying power back in the buyer's hands. This is where I'm seeing the cracks in our market right now. Now, regardless of the interest rates, we will always have people who want to buy or sell a home. However, with the current interest rates, this is putting a lot of hesitancy in the market right now, both for buyers and sellers. Now, at the end of last year, beginning of this year, everyone believed that there were going to be about 3 rate cuts that were going to come from the feds this year. And for buyers, that gave them some hope that in the near future, these rates were going to come down. However, with the inflation and the jobs data that has come out so far this year, barring the most recent jobs report that came out showing a little bit of a decline, the Fed has now not lowered the rate again, and they're pushing the possibility of a rate cut. They're just pushing it down the road. This means that rates are going to stay higher longer. This is just giving pause to those buyers that feel like maybe they're just too stretched. And I can't blame them. However, for those buyers that can buy right now, having the ability to negotiate on price and terms and not have to give everything to the seller just to get the house you want, that is a great opportunity. Because what we do know is we have pent-up demand. And when those interest rates shift, that demand is going to return into the market. And create more competition. Now, again, I am not a proponent of being house poor. So if this is not something that makes you comfortable or anything that you can just do comfortably, then don't buy right now. And while we are in a balanced market in the overall Phoenix metro area, this does not mean that every city within Phoenix is in that balanced market. You have to dive deeper into that information so that you're well informed. Just take a look at this chart and you can see that on this list from Chandler to Paradise Valley, these are all still in sellers markets. And from Goodyear to Buckeye, these are all in buyers markets, with Surprise being the lone city in the balanced market. Now, I do think that while we are going to see rates stay higher longer, we will see our balanced market continue, but that does not mean that prices are going to plummet. And we are a strange city. Again, depending on where you're looking and the price point you're looking in, it is not unusual for some sellers to wait the summer out before putting their house on the market. And many buyers, if they don't have to buy in the summer and move in the dead heat of the summer, they will put it off. Now, that does not mean that homes still don't come on the market in the summer or that they don't sell in the summer. In fact, I will tell many of my sellers, don't wait to put your house on in the market because you will probably have less competition. But what this does mean is that you will need to be paying attention to the market and be getting great guidance from someone that really understands our market. So let me know what you think about the market. Are you seeing the same things? And do you agree with the experts that think that we're going to see rates stay higher longer, but they're probably going to start coming down either the end of this year or beginning of next year? And if you have any specific questions about your area, don't hesitate to reach out. As always, I thank you for watching, and I'll see you next time.